interesting edition where I'll be talking about the market structure. Okay, so I'm your host Morgan Pika Yuzurukama Jr. Ensure to subscribe to my YouTube channel and hit the notification button for uh, getting access to the videos that I'll be uploading. Okay, to start with, I'll start by defining what market structure is. So, market structure perhaps is most important aspect in trading and analyzing the chart. By having a good understanding of the market structure, that alone could elevate your trading beyond beliefs. So in this lesson, I'll be going through over the different types of market trends and structural breaks. So actually, there are three basic movements that the market trends in: the uptrend, downtrend, and ranging market. And each one is comprised of four swing points: higher high, abbreviated HH; higher low, HL; lower high, LH; and lower low, which is LL. So the first example there, these are market structures that we are seeing here. So here's so the uptrend, this is where price prints a series of higher highs and lower lows. And the second one, the middle one, this is just an example of a ranging market. A ranging market is the market where where when price is moving with no direction and just consolidating between the levels of support and resistance, printing equal highs and equal lows. Then the last but not the least, just an example of the downtrend. The downtrend is when price is printing the series of lower high and lower lows. So if you aren't familiar with how to identify the swing points, here is a brief example. So as you can see on top of the red cycle there, you can see a swing point, and that is what we call higher high. Then down one there, you can see a swing point that we call lower low, because it has broken the previous higher low. Then the third one there, it's the swing point that we call lower high. So now let me stop here with the drawings, and then so that you guys you can see an example on the chart. So in an uptrend, we get to have a series of where the market prints higher high, higher low. As you can see, higher high, higher low, just after the break of structure. Then in a downtrend, we get to see the market moving, breaking the higher low, creating a lower low. Then it goes, retraces, printing a lower high, and then lower low, lower high, lower low, lower high. Then in a ranging market, jury prints what we call it's a consolidating market where we get to have equal highs and equal lows. Now, what is break-off structure? I hope the understanding of the three basic market movement was pretty straightforward. There isn't much, to be honest. As long as you can be able to identify your swing points, you're good to go. Now that was just one half of understanding structure. So I'm going to teach you guys on how to identify what we call the break of structure. So it's important, and how identifying these breaks of structure is necessary to be able to find trading opportunities, because by understanding the principles of the market movement, you can accurately determine where the buyers and the sellers are gaining strength or weakness. So there are two types of break of structure that you must differentiate between. We have a continuation break in an uptrend and a downtrend, and the reversal break that is also known as the change of character. Let's dive in. So the first diagram there, the one that is drawn up, is an example where we see there is higher highs that is being printed. This tells us that we're in an uptrend. Now, if you pay attention, every time a high is broken, it prints a higher high and then pulls back, printing a higher low. Then continues to break the high. So we label such. We label each time it breaks these points as in the break of structure, BOS. This is to tell us that price is still continuing its move it's move up and buyers are still in power. Now the second one, this is just a change of character. So on a change of character, we have just a break of structure from the uptrend, and now that the difference between, with this example here, as you can see, price was just in an uptrend, and then the low failed to hold, and price then prints a lower low. That's our first sign that sellers are coming into power. And when price breaks through the last low, that is an indication that there can be a shift in the trend. So you can identify the break of structures in the change of character. And once you anticipate the change of character and price prints a lower low, you can expect price to print a pullback and now forms a lower high. And then it sells off, forming an even lower low. So now let me show you guys these two examples on the chart. So we have, so under the continuation, we have the break of structure creating an imbalance, and then market the price comes back to fill up the imbalance on the order blocks, and then it breaks structure again, causing an imbalance, and then we draw our order block on an indecision candle. It's a candle that has got equal highs as well as equal low, where the buyers as well as the selling are on equal, and it reforms wicks. Then this is an example of a change of character, where it breaks as you can see, the market here is in an uptrend. Break structure, retraces back, break structure, retraces, break structure, retraces. But on this one, after breaking the structure, it failed to hold the higher low, creating a lower low, and then the market retraces, price retraces to the incision candle, and then leaving an order block up, and then it retraces back and open up some order, and then draw back down to the market direction. Thank you for attention. Sure to subscribe to my YouTube channel. I'm your host, Morgan Pikaizo Kamajun.